Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Monday the 27th. Well, you've got crude oil down $5. Diesel corn hit opened at 82, hit a high of 85, and is down at 71 and a quarter now. 73 and three quarters last, down 13 and three quarter cent. Novi beans opened at 12.46, hit a high of 12.50, 12.50, and is traded as low as 12.14 and a half, back to 12.20 right now. But we are down 33 and a quarter cent. Wheat is hanging in there. Wheat's only down uh, 3 and 4 respectively in Chicago and KC. But you can fill in the blanks. It had to happen sooner or later. We had a tremendous rally in the corn, 60 plus cents. We hit 492 after trading 425 on the 30th. Um, Beans were trading 11.25, hit 12.56. Tremendous rally. So we've given a huge chunk back. This is how it always happens. We go up the escalator and then we go down the elevator shaft. Um, don't know what else to tell you. I mean, we could absolutely positively a week from now be higher. These are volatile markets, trading the weather and also trading geopolitics, and having crude oil come down, $5. I think a lot of people, again, I've been sucked into that. Every time we get a spike in crude oil, they tend to load up on commodities thinking that we're going to get back to high inflation. Not that we don't already have inflation that's too high. So that's the story. Hopefully you rewarded the rally with sales and hedges. If you get my letter, you know that I sent out, I was kind of concerned about this Thursday and Friday. Friday morning, I sent out suggestions to get hedges on. I did not know that this was going to happen, because if I had known we were going to break 30 cents in the beans, I would have sold myself 2,000 contracts, wouldn't I have? So don't come at me with that garbage. I just knew it was a rally that we needed to reward and protect. And now, if you have those puts on, we're going to roll them down, try and take money off, because the way this market trades, absolutely positively, we could whip around and go higher in the next couple weeks. So these are volatile markets. Manage your risk, roll your options where you can. We'll see today what happens with the Mexican border being open. And now it opens in a month, according to the release. But we'll see if that impacts the flat price today. I'm sure it's going to be a wild day. However, we saw this before. Remember back on June 4th when they announced that the New World School Room was in Texas. We made our lows and then rallied. So it's going to be volatile. I think this is a market where you be very, very, very careful at, no matter if you're a bull or a bear. As I know it's easy for me to say, but if you're a farmer or producer, you're always bet long. This is a market where you need to be rewarding rallies, and when you get those good rallies, you try and buy puts, because when you're on a rally, puts are cheap. When you wake up in the morning and beans are down 33 cents, the puts are more expensive. That is how a hedge works. Okay, guys, this is Chris Robinson. Give me a call, robinsonagmarketing.com. If you're not getting my letter, I did this whole weekly breakdown on yesterday morning, Sunday. A lot of these levels that I put in the letter are already being triggered, and we'll see how the rest of the week turns out. This is Chris. Have a good day.